high interest rates don't necessarily mean a downturn in the stock market. It could be temporary. Of course, the stock market is now reacting negatively to the possibility of higher rates. But if you look at the history, you'll find that stock markets were able to do quite well even with high interest rates. And of course, that means you got to find companies with pricing power, companies that are able to raise prices in line with the higher inflation. But there's no question that the Fed could go much, much higher, and there could be a lot more pain ahead, provided that the CPI stays at this level or even goes higher.
Your point is taken about interest rates not necessarily meaning a stock market downturn, higher interest rates, but the way interest rates are going up this time, it seems like most of the global economies might get tipped into recession, and that has ramifications for the stock market, at least in the foreseeable future. Do you see that as a real risk, or do you think recession might be averted in some of the major economies?
Oh, yes. I mean, I think the possibility of recession is definitely there. In fact, if you take the official definition of recession, we are already in a recession in the U.S. because you've had 2 quarters of negative growth. So we are in a recession, but a recession does not necessarily mean that people feel poor. You're going to find that these two things are quite different in many ways. And yes, a recession is hitting companies. And of course, the stock prices decline because their earnings go down. But this could be quite temporary once these companies are able to raise prices again.
What does all this mean for currencies, Mark? I mean, the stock market is one part of the equation. But there is a huge flux going on in the currency world. I mean, where I sit in London, the pound has collapsed over the last 1 month. We are seeing many such reactions, even in the euro versus the dollar. How do you think this part of the equation will play out between the dollar and the other major currencies?
That's quite remarkable when you think about not only the pound sterling, but the euro. Look at where the euro went. It's quite remarkable. And what does that mean? It means that imports for these countries in Europe and the UK are going to become a lot more expensive, more difficult, because usually these imports are denominated in dollars. It means that the US, of course, can import a lot more cheaper. And the rest of the world, of course, is under pressure because you see all these currencies are weak against the US dollar. Indian rupee actually has been holding up fairly well. But if you look at other countries, it's been pretty much of a disaster for many of these countries. But you must remember that even in situations like this, you have companies that can do quite well. For example, in Turkey, companies that can export and receive dollars, and their costs are in Turkish lira, which is devaluated massively against the US dollar, these companies can do quite well. So it's not a complete disaster for everyone, but it's certainly something that's quite remarkable when we see the major currencies decline against the US dollar to such an extent.
If you like the video, do like, comment, share and subscribe.